Welcome to yet another episode of Western Waterworks Construction Corner. Today we are joined by Marcus Piquet of Ambrose Advisors, and he is the Senior Managing Director here at the office and also an ESOP guru. And today we're just going to be getting to talk to him about ESOPs, what they are, when to implement them, and it's a subject I was unfamiliar with, and I'm sure a lot of others in many industries are unfamiliar with. So thank you for joining us, Marcus.
Happy to do it. Thank
you. Just the way we get started is, can you just give a brief introduction of how long you've been in the industry and what really attracted you to join the industry?
Well, I fell into this completely by accident. I'm a tax CPA by background and training, and my previous CPA firm had a lot of clients that happened to be employee-owned through an employee stock ownership plan. And so over time, we developed a bit of a demand among our clientele for better administration and consulting services around ESOPs. Mm-hmm. So we set up a separate company to do just that. As it grew, and I ran that company from day one, as it grew, we spun it out to be a standalone company. I left the CPA life behind and continued to grow this. We brought in investment banking, we brought in lawyers, and now we're up to about 27 employees doing nothing but ESOP work.
And just growing.
That's right.
Great. So I think a good way maybe to start, for those who don't know or are unfamiliar with an ESOP, what is an ESOP?
Well, the word stands for Employee Stock Ownership Plan. It's a tax-qualified retirement plan. Think of something somewhat similar to a 401k or a profit-sharing plan. The idea is to build retirement wealth through no cost, out-of-pocket cost to the employee, but through their own service that they are performing for the company, they can earn stock in the company that they work for.
Okay. So it's just the alternative to a 401k, but still given the same type of benefits, right?
Yeah, the difference would be that it's entirely company funded, not employee funded. Like 401k is mostly employee funded, right? And instead of investing in publicly traded mutual funds, ESOPs invest in the company that you work for.
Oh, cool. And then typically, when would the best time to maybe set up the ESOP?
So there's really two different kinds of ESOPs. There's what I call contributory ESOPs, where maybe the ESOP owns a small portion of the company, and it's just a way for employees to get some piece of the equity, usually a very minor percentage. What we deal in most commonly, however, are leveraged ESOPs, and these are typically undertaken for the purposes of an exit strategy for the business owner. Right, and so as soon as the business owner is starting to put together a plan for retirement and ownership succession, it's a good time to start thinking about an ESOP. Ideally, you're looking 5 to 10 years prior to the time that the owner wants to be completely exited and paid off.
Okay. And then in your opinion, what are some of the major benefits that business owner would have when setting up the ESOP?
So there is a couple of major benefits for the business owner himself, setting aside the benefits for the employees, which are significant. But if we focus on the owner for a minute, number one, there's the ability to sell a business that otherwise might not be very marketable. Certain businesses and certain industries are just not that marketable. Also, and being able to sell for full fair market value. It can be a very private, what I call a quick, quiet, and friendly close. You don't have to share your financial data with all your competitors and customers and so on. It's very private. It's internally managed. A very, very large incentive for a lot of business owners is a big tax incentive called Section 1042 of the Internal Revenue Code. And if you can check all of the boxes that are required by the code, you can sell your stock to the ESOP and avoid paying any capital gains on that sale. So essentially a tax-free sale to your employees. And if you think about that for a moment, the ESOP would net you almost 50% more cash after tax than an otherwise taxable sale to a third party like private equity or a competitor or something of that nature.
Okay. And then if we were to transition to the employee benefits, what would you say are a couple major ones for the employees?
Yeah, that's the most exciting part.
Right.
I mean, I love the business owners, but what this can do for the employees is just really inspiring. The idea here is that they can earn stock in the company that they work for at no cost to themselves. They can accumulate significant amounts of retirement wealth that way. especially with the 100% ESOP-owned enterprises that we do a lot of work with, the employee benefits can be really, really significant. There's national studies that have shown that on average, ESOPs deliver 3 to 7 times the retirement savings that other similar retirement plans might.
Right.
And among those 100% ESOP-owned companies, the multiples are even higher.
Okay.
And so, I mean, every year we process thousands and thousands of distribution payments to the employee owners of our clients. And for those that are in the last 10 years of their career, 55 to 64 age group, those checks are almost always in the 6 figures, sometimes in the very high 6 figures.
Okay.
And that's exciting.
Yeah, very. And going off of that, I'm sure there's a lot of internal motivation from employees or your team knowing that what they're contributing is help building, equity for them as well. What would you say, or how could you transition that to make contractors how is that a good option for a contractor?
Contractors are a very special and especially good ESOP candidate in many cases. In fact, I would go so far to say 30 to 40% of the work that we're doing is with contractors.
Okay.
Why is that? Well, I touched on one of those points already. Contractors are not very marketable. There's not very many potential buyers out there for most construction contractors.
Right.
And so here we have the ability to create our own buyer, right? And a buyer that's willing to pay full fair market value based upon the cash flows of the business. Cash flows in the construction sector are very robust.
Right.
There may not be a lot of collateral, there may not be a lot of long-term contracts, but hey, there's cash flow. Right. And also not a lot of debt, typically. So when you have a lot of debt capacity, you have a lot of cash flow, have the potential for a lot of value for the business owner and for the employees.
Okay. So if I were to put myself in the shoes of a contractor and I'm the owner of my company, I know you said the succession plan really should be looking for a 5 to 10 year advance. How long does it typically take to set up the ESOP? Say I move forward with it.
Well, our process is usually as follows. Normally we have some preliminary meetings just to introduce the concepts, talk at a very high level, and see if a business owner is interested in exploring it further. If he is, we'll actually dig in and do a little bit of financial due diligence and come up with a high-level estimate of the value of the company and what we think 1 or 2 of the most likely ESOP structures would look like. We present that to the client as a case study. We don't charge for that. We look at that as an opportunity for us to get to know them and for them to get to know us and get familiar with our work product. If they decide to move forward at that point, we typically begin with what we call a phase 1 analysis, a transaction structure and design process. That's more intense. That's usually about an intense 30 to 40 day process.
Okay.
Where we're really digging in and affirming everything. Look at it as creating the project plan or the blueprints for the project, if you will.
Yep.
It's a comprehensive plan. If at that point the business owner decides to move forward and execute the transaction and go ahead and build, then at that point it's about 3 months,
3 months,
beginning to end. So overall, the whole process, you're looking at 4 to 5 months if you're moving expeditiously.
Right.
Some of these projects take us much longer. Sometimes we're working with the same client for 3 or 4 years.
Sure.
Trying to get the right timing and the right pieces in place. But most of our deals are about 4 months.
4 months. And that kind of leads into my next question, and you did kind of touch on it. How should I, as a contractor, prepare for the transaction to go forward? Should I start creating a leadership team, or because now it's becoming more of a collective, should I start picking more people that I think have the strength to lead the company to provide better results? Is there any information I should be?
It's a great question. The best thing that a company can do to prepare to become employee owned is to begin building the right type of culture.
Okay.
A culture of accountability, a culture of pride in the work that you do, right? That's pretty intangible and hard to describe, but that kind of overall culture is important. Having successor leadership in place is nice, but it's not necessary at the outset. Under the ESOP structure, it's going to take us a few years to pay out that business owner.
Right.
And very often it's that period of time during which the owner is becoming liquid that he's also developing and assembling the successor leadership team so that when that business owner is ready to completely exit, the leadership team can stand on its own. Aside from that, I mean, some formalities are nice. Having a good history of financial reporting
Right.
is nice.
It's important.
This is a financial transaction, and the ESOP is a financial buyer. So a lot of the ESOP's due diligence is about having, hopefully at a minimum, CPA reviewed financial statements going back 2 or 3 years. Also having the practice of forecasting and then comparing your actual to forecast.
Right.
That from a financial standpoint, that's really important. It can show the ESOP team that we have a track record of trying to estimate what we're going to do this year, and comparing how well we perform to plan.
Right.
Will give them a lot more credibility. The financial forecast, a lot more credibility that goes into the valuation analysis.
Sure. And then since you said you're doing around 30 to 40% have been contractors, can you name maybe a couple of successful traits that they maybe all have?
Traits. They're so different. I mean, we're doing everything up and down the chain of construction, anything from specialty subcontractors to suppliers, all the way up to architects and engineers,
right.
Including generals and so on. The traits, I think, are a stable cash flow. Right. If you're in a very, very volatile business, it's hard to get any buyer, whether it's an ESOP or any other buyer for that matter, hard to get any buyer comfortable with a value. Right. So having a predictable and stable cash flow is really important, and really that's about it.
Okay. How do these companies perform when compared to owned by private equity or just a sole proprietorship? Do they tend to perform better, about the same?
Well, they do perform better, as you would probably expect.
Right.
I always ask employees when I'm introducing the concept of employee ownership, I always ask them, how many of you have ever washed a rental car? Well, nobody washes a rental car.
Probably not many.
It's somebody else's problem. I'm going to return that car filthy dirty. I don't care. Not my problem. It's someone else's problem.
Right.
Well, the whole employee ownership culture seeks to turn that on its head, right? And when I got my first car at age 16, it was a total piece of junk, but I washed it 2 or 3 times a week, right?
Right.
Because it was mine. I owned it. It was my independence.
Valued it.
Pride of ownership, right? And so, as you can expect, if you can instill that kind of culture and that ownership mentality within a company, not to say that the employees weren't good employees before, but it just changes the whole paradigm.
Right.
Now you're working for you, and you're working for your friends and your colleagues. You're not working for some business owner that you really don't have that kind of connection with.
Right. And then right now the construction industry is really struggling to attract younger talent to the field. The millennial generation just does not seem to want to join in as much as previous. Do you think being an ESOP-owned company, you have a leg up in recruiting?
We sure hope so. Now, we don't really oversell that. You're absolutely right. It's hard to recruit labor into the construction trades to start with, and the labor market is incredibly tight at the moment as well, just given the long-term growth in the economy and so on, which is a great thing. Very hard to attract and retain labor. If there is a strong culture of employee ownership in the company, it's our experience that retention improves.
Right.
And whether you're able to recruit better employees or not, hard to say. Whether or not they're going to value that. Also, you brought up the millennial generation. Retirement seems an awfully long way out to a millennial. So when we're explaining the benefits of an ESOP-owned company to these workers, we're not really beating the retirement drum so much. We're saying, look, you're building a nest egg, you're creating wealth that you can take with you to your next place of employment.
Right.
These ESOP benefits are fully transferable through a rollover process to another company's 401k or IRA, and then we show them the benefit of having a compounding value of a retirement plan in your early years of employment. And so we have to be realistic about it. Not everyone's going to stay at that company until age 65.
Correct.
However, stay long enough to build up a nice share of employee ownership through the ESOP, and then you can transfer those benefits elsewhere.
Okay. And then really my last question is, as a business owner, and I'm not thinking about success, I haven't thought about it yet, but maybe the time is coming up. If I just wanted to get a little bit of information and start weighing the options, whether it's an ESOP, passing it to another hard worker or family member, what do you think the best way to what is the best way to pick your option or find the best option for you?
Yeah, it's really the best way to do that is to work with an advisor like us. We are not one-trick ponies in the sense that we don't feel like an ESOP is right for everybody. In fact, we have a whole division of our firm that handles traditional M&A sales to non-ESOP buyers as well. Some of our clients like the ESOP concept. It sounds attractive to them, but they're a little bit skeptical. They don't know what might be out there on the street. Maybe there's some huge pot of gold that somebody else might offer them for their company that would be more than a financial buyer like an ESOP could pay. Well, we're very happy to run what we call a dual track process in those cases. We'll develop and design an ESOP transaction, and we treat that as bid number one. We put that in our pocket, and then we go out to the street and we see what we want to process and see what other buyers are out there. And then we can come back and we can evaluate and compare and contrast those offers. That's if we're looking to a sale to a third party. If you're looking to transition the business to a family member or to a member of the management team or a coalition of management, that's certainly doable as well. Becomes very difficult to do without discounting the value because everything is being paid for with after-tax dollars.
Right.
And so that can be a challenge, but that's something we can model as well.
Sure. Cool. Well, Marcus, I really appreciate you taking the time. And again, like I said earlier, it's a topic I'm sure not a lot of people are familiar with, especially younger people like myself. And it does seem that ESOPs are a great way a new wave of capitalism, right? It's generosity. It's putting your employees at the forerunner. But again, if someone wants to reach out and get a little more information from you, you can give some final thoughts as well as how to get in contact with you.
Sure. I just want to share a couple of closing comments. One tax benefit that we haven't touched on, which I think is really important, is the 100% ESOP-owned company, after making what we call an S election, becomes 100% federally tax exempt. And the state of California, if that happens to be where you do business, only charges a 1.5% tax on S corporations. Wow. So the 100% ESOP-owned S corporation enjoys a 1.5% total tax rate on its profits. Think of what that can do for the future of a company. Think about all the extra cash flow that can be reinvested in the future of these employees, the growth in the business, the investments that the company can make, the aggressiveness in the pricing and the bidding and so on that can help you earn market share. So a lot of the success over the long run of these employee-owned enterprises is due to that really, really amazing tax benefit.
Right.
So that's really something that's exciting, especially in a high tax environment like the state of California where we do a lot of our work. If business owners are interested in exploring this further, the easiest way to do that is just go to our website, ambroseadvisors.com. You can find me there and give me a call, and we're certainly very happy to help.
Awesome. Well, thank you again. I appreciate it.
Thank you.